recording. Alright, so if you haven't been with us in the previous sessions, what we are backtesting is Adrian's 5-minute model essentially. It is a little bit different in that we are only using the Q3 manipulations because of the data that he has already collected on this. So according to his data, 80% of the time a Q3 manipulation is going to deliver to 2.5 standard deviations, and about I think high 80s% of the time the manipulation will in fact occur during Q3 anyway. So basically the model goes as is. First, we're going to set up our charts every day to seek previous day high and previous day low. Then we're going to mark out OTE of that range, as well as the fixed range volume profile. We're going to mark the PD arrays within OTE, and then we're going to look for some sort of setup for the next 4-hour candle expansion to either get into that area or back away from it. The idea is that we're looking to catch the 5-minute manipulation to catch the 4-hour candle expansion. So the model is as is. We look for that 5-minute CSD. We're looking for a displacement out of that manipulation zone. We mark the PD arrays in that manipulation zone as well as OTE. Once we have a return to that zone, we can take the model, we can take the trade. Now the requirements for us to take a trade is that we are waiting for an entry at the 50% level, 61 point or 62% level, 0.7005 or 0.79. So we do need a requirement of both, and so it won't be just the zone, which is again different from how Adrian actually trades it. So we're requiring that, and then we're taking entries at SBS 2, 4, or 5, targeting the 4-hour candle expansion standard deviations. So there were quite a few questions that came up in our last session, which I did discuss with Adrian. And we are going, so there's going to be a little bit more clarity in our reps going forward. There are some adjustments that I need to make. So for example, I think it was these 3 reps right here. It was what we are actually targeting as far as what deviation we were using. So we were targeting this 1.5 here, and I wanted to be sure, are we targeting either the previous 1.5 session, or were we using this current session? Was the outstanding question. So for these 3 reps, or it might have even been these, let me just take a double look here. So this one here, we got up to 4.5 on this one. We did get to 4.5 on this one as well. Okay, so I think it might have been those. Let me double check. Okay. 4.5. So this is the old chart. Reach 1.5 SD. Hold on a second. I can't remember which rep it was. Most recent. Hold on. Need to unlock this. Alright, so we haven't gotten to the point in the model where we need to make any adjustments yet, just because we're not in our first even 20 reps of it. It is taking a bit longer than I thought it would to get through all the reps. So with that being said, all the reps seem to be valid so far. Most recent 4-hour candle deviations aligned with Q3. These are Q3 deviations. Yeah, okay, so these reps were all valid. So we were taking the most recent deviations, and it did hit 4.5 anyway. I don't have whether it took 4.5 of this, although just based on where these deviations are being projected to, it definitely met those as well. Alright, so I think it was these as well. So this all hit 4.5, correct? That'd be the most recent. And now let me go back and check these, because I do think it was these up top here. So 1.5. Alright, so it would have been the most recent, is what he was saying. Which would be these. We wouldn't be referring to Asia. We'd be referring to London. So technically, these reps did not hit 1.5. So I think it was all 4. 1, 2, yeah, okay. All the same reps. So I'm going to uncheck these since we did not achieve 1.5 of the most recent deviation. 1 SD of London and 1.5 of Asia. So these are not considered a win. Now, one adjustment that I want to make to this is I wanted to add a win-loss column where, so technically these would be the wins because these are where we're taking these are where we're taking profits at 1.5, 2.5, 3.5, and 4.5. So I think what I'm going to do is I'm going to just add a column for a full stop. I'll just put SL so we can see it. Okay. So let's double check this one. Yep, so these are all stops here. And let me check these two. These hit target. Oh, this was end of day. Okay. I think we're good here. So the discrepancy between the trades that we just closed because it's end of session or end of day will have nothing checked. We'll see. We'll see how that develops. This should not be as common as I think would happen. And these trades here were these were basically after 2 p.m. This can be something that we decide to eliminate altogether. I decided in the moment to add that session just because you guys technically, the PM session is technically starting at 2 p.m. when the stream starts. So the entry occurred. Do I have a bigger chart? Yeah, okay. So the displacement happened here and we were returning to this zone. So this is where the entry actually occurred. It was technically, I think, prior. Oh, wait, hold on. This is the entire zone. Okay, yeah, so some of the candle or the entry technically occurred before 2 p.m. but the 4-hour candle that we would have been catching would have been 2 p.m. to 6 p.m. So again, just depending on how many trades develop for this actual 4-hour candle, we may decide to eliminate that candle altogether, but the actual entry occurred during the 150 to 210 macro. So that's why I added this 4-hour candle to it. Okay, so with that being said, any of you that were here in the last session, do any of you guys have any questions, or do any of the newcomers have any questions? I'm going to move forward into the next set of reps here. So again, we are just marking out previous day high and previous day low. So we are now on Tuesday. 18, yep. All right, so we would mark out previous day high and previous day low, which we already have marked with our indicators. Then we are going to draw our fixed range profile. And then obviously we have OTE already on here with the indicators as well. Hey Yerm, how's it going? I don't necessarily have an idea of how long I'm staying on today. This is my first time being home since Tuesday. My brother had his baby this week, or my brother's wife had their baby this week. So I actually just have a lot of house maintenance to do. But other than that, I'm free, generally speaking. So I think I'm just gonna go with, I'm gonna stay on as long as I can, as long as I have the mental capacity to do so. Thanks. I'll be sure to let him know that. But it's their first son, so yeah. Their third child. I'm an aunt thrice. But you know, if you have something to do, as always, this will be recorded. I still need to post the most recent 3 videos anyway, so this will be recorded, and per usual, I will post it. All right, so OTE's down here. Jump up to the 1 hour and see what's going on. So we just have this 1 hour busy down here. Within OTE, this is the only one that's unfilled, or the obvious one that's unfilled. There's also a tiny one here aligned with this old high. Let me change this to a fair value gap. So I'll mark out this one as well, again just because it's nested with the old high. And then we have this order block here. OTE stands for optimal trade entry. Well, technically it's the 0.705, but on the indicator it's 0.618. 0.618 is a universal OTE level, so it's what's known as the golden pocket universally. But technically OT or ICT's OTE is 0.705. Where? Oh, 0.75. There we go. 0.705. I don't know why this is adjusted that way. Hold on a second. Oh, wrong one. 0.75. 0.705. I hadn't noticed that. Okay. Yes, exactly. So 0.618, 0.705, 0.79. That entire area is the OTE zone. Alright, so we have PD arrays here, we have PM session here, and OTE 0.618 right here. So I think it's safe to say this area is where I'd like price to go down to, or return to before we seek a long. Previous day closed bullish based on how OTE is presenting here. So just looking at it, lower time frame, we opened down here, we closed up here, so we closed bullish. Our bias then is that we are looking for bullish price action, or to continue to basically we're looking to target previous day high. So with that being said, we're looking to get into this area and then seek a long from out of this area. So depending on what happens here, we can either search for a short going into OTE, or we can search for a long once we reach OTE. And it'll just depend on what CSDs form. I just marked the 1 hour PD arrays down here. So fair value gap here, just a regular like obvious wide open fair value gap that's nested with OTE. Then I nested out the fair value gap below that, that's also aligned with this previous high here. So see how they're right in the middle of one another. Because that's 2 PD arrays, that would be of importance to me as well. And then I just marked out the closest order block, or the only order block down here as well, as kind of the last line in the sand type of thing. So this is, I mean, it's obviously holding up previous day high from what we can see. So if that, or previous day low, I mean. So if that breaks, then bias could be the opposite direction at that point. Should we incorporate time frame PD arrays 15 1 hour, 4 hour, 1 day? Technically, I think we only need to incorporate 1 hour. Because we are looking to capture the 4 hour candle expansion, right? But the 1 hour, like if we're targeting a 1 hour PD array, the 4 hour candle expansion will likely expand in that area. And then likewise, because we're using like open, high, low, close theory with the 5-minute change in state deliveries, we're already capturing the 1 hour time frame in that ideal, right? So yeah, I think the 1 hour is sufficient for PD arrays. I don't think we need to refine to the 15-minute. And this is really just because when we're looking for, Adrian and I trade pretty similarly in that when we're looking for like the catch the daily expansion, we're only looking for the 1 hour change in state of delivery, and that will generally capture the entire daily range. So the 5-minute should capture the 4 hour perfectly fine, which is again what we've noticed in our trading, hence why we're trying to prove it with data now. All right, so 5-minute here, we will play forward. We are waiting for a 5-minute CSD to form first. We do have this 5-minute low currently here. Let me see. Low 47.75. Okay. Alright, so yeah, this is currently the CSDIC, confirming that on the 1 minute. This is the swing. This high to this low. Change in state of delivery, the high that you would use is the high that created the low, or vice versa, the low that created the high. So this is currently the swing that I'm seeing from Asia low. We're in Q2, so we can still have one form in Q3. We're in Q3 now. Mind you, we are not trading, or we're not testing the Asia 4-hour candles. This is just giving us context for the next session, which we will indeed trade. So see, this was ambiguous, right? Obviously I can see it because I dropped down to a lower time frame. This one is obvious. It's obvious because we have bigger bodies, it's consecutive candles. So this is the clear CSD, also occurring after Q3. So we traded two deviations on this. Where is my 2 and there it is. Oh, we missed 2 actually. So it missed 2. So this would be, I would consider this counter trend. I'll pop 2 on there since we barely missed it. And it's already traded to 2 deviations prior to London. Alright, so far here, once we reach 2.5 standard deviations, we are just accumulating. This seems to me as if it would continue to distribute because it's choosing to accumulate. Alright, so now that's midnight open here. We did distribute to EQ of previous day's range. We took out this low here. We missed PM session low, or we haven't gotten to PM session low yet, which is nested with OTE, or you know, sitting right above OTE. So we've fully reached these deviations so far. Let me also pull up PM session deviations while I'm here, because Asia essentially would be referring to PM session. We only got up to 1 deviation of PM session deviations, and then we came back. So from here, if PM session deviations are going to play out, we would want to see this low stay intact if it's going to continue higher, since we did meet this full extension of deviations from Asia range. We are at 12:30. There's 1 a.m. We don't have a bullish CSD until we close above this high here. I just want to see something. Okay. Alright, so here's 2 a.m. We are in Q2 now. Okay. So this is something that Adrian and I have not been able to communicate on yet, just because I had to leave my house earlier in the week. But this is the way standard deviations are taught. It would be from swing low to swing high, right? Now, I've looked through Adrian's charts, and it seems like he would also use this change in state delivery as well. However, in his mentorship, he taught that it was the up close candle as opposed to the swing high to swing low. So this is something that we haven't communicated on. I'm going to opt here to use the swing high. Can anyone guess why? I'll give you a second to reply, or give you 30 seconds to reply if you want to participate. The reason I'm going to opt to use this swing high instead of the up close candle in this specific case is because this up close candle is an inside candle. So this was we went low, we created a high, went low, and then this is a retracement to go lower. Right, so because of this is the obvious swing high here. So I'm gonna go with this one to say that this is a CSD. We have not closed above it yet, which is my point. There were examples that we went over as far as Adrian's old charts where I did opt to use the up close candle or the down close candle, and then it looked like in his chart he did actually opt for the swing high or swing low. Why is that the swing high in your mind as opposed to several previous candles that have higher highs? Because it's the first one. It's the first high before the low. Because when you're looking for a CSD, we're only using the high that made the low or the low that made the high. This one here, it could be, but see, so this high, sure, it made the new low that closed here, but after this low we continue to close lower. So this is the high that indeed actually, because I don't know, we can go into lower time frame to like get super technical here, but see, this high is the actual high that closed the low. But then after that high, we continue to make new lows. So all these highs up until this point, as far as market structure goes, all these highs up until this point did not make a new low, right? Until this high. It finally took out this low. So this high made this low. So had that green candle after that high you marked out were not green, would it be different? No, it wouldn't be different. It would be different if this made a swing high. I don't care I don't care if it's high, if it's a up close candle or a down close candle. For me, it's just swing high to swing low. But the way Adrian taught it in his mentorship was according to up close and down close candles. Because fractally speaking, when we go to this up close candle on a 1 minute time frame, right, which is either one of these, let's see, this is 15, so I'm assuming it's 19, close lower. Okay, so it's this candle here, so it's this high, right? So on this chart, on the 1 minute chart, yes, this is the swing high, or this is a swing high. So fractally speaking, this would be the swing that we have to close. But on the higher time frame here, on the 5 minute, it's this one, which, you know, I think is where normally people get messed up. They're waiting for this high to get closed, and then once it does close, they go all in, and then this was just a run on liquidity to take it lower. But that's really it. I'm just looking for on the current chart that we're trading, because I have no reason to look at a lower time frame. If this is the chart that I'm taking the entry on, then I want the swing high on this current chart to be broken. There's no swing highs here up until this point. Okay. Any other questions, Jeremy, before I move on? Right, exactly, because I'm only focused on swing highs and swing lows. So if this was not higher than these candles, and it did not make a swing high, because a swing high is when you have a high in the middle with a lower candle to the left and a lower candle to the right. Their highs are lower than the candle in the middle. That's all that is. So this here, this box right here, or these candles right here, this is a swing high. So if that swing high was not there, then yes, it would be different to me. If this candle was not higher than the candle before that, then yes, I would refer to this one. Yes, yes, yes. Yes, exactly. Always the first swing high before the swing low. Because even here, right, which is why I mentioned the up close candle. Yes, 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 exactly. Same thing for down close or swing lows. Which Yerm, you've been in a lot of my backtest sessions. You should know that that's my definition of a swing high and swing low by now. But you know, with these candles here, that's why Adrian does use the up close candles and down close candles, because fractally speaking, on the lower time frame, these are swing highs, right? But on the current chart that we're currently trading, I know that this is not a swing high. Or the reason I'm not saying it's a swing high for this up close candle is specifically because it didn't take the high or low of the previous candle. No, yeah, we would align in this, in how we're saying this here. Because there was a chart, it was one of these days, I'm pretty sure it was the 3rd. Let me see. Okay, this right here, this swing right there. Oops. Why is it getting... Okay. This swing right here, right? I don't know why it won't let me zoom in. I actually opted to use this down close candle here because just because of how Adrian taught in his mentorship. Down close candle for, you know, for bearish change of state delivery, bullish candle for bullish state delivery, right? Like that's the candle that we're looking to close below. But when we go back to Adrian's chart within the Discord of that same exact day, so from Adrian during one, he uses the entire swing. See, how come this is letting me zoom in? Alright, so he's using this entire swing, and I opted to use this down close candle. And what do you notice about all of these down close candles before this one? They're all inside candles. So, like, we didn't make a new low with these down close candles. They're inside of the previous up close candle. This is the only one where we actually made a swing low. Yes, exactly, because I was just going by the letter of the law versus the spirit of the law. So I went with the down close candle here. But then when I went back and referred to his chart, looking at this, he did act. But so again, my idea of a swing or a manipulation swing is actually this, right? Like this is naturally where I would have chosen it. But going by his mentorship, I wanted to adhere to what he was teaching, so I went with this one. But when I referred back to his chart, he did in fact use a swing high, a swing low. And I think this case again is specific or special because these down close candles are inside candles, in which the down close candles did not create a swing low. Okay, sweet. Glad we are on the same page. Ote. Anyone else have any questions? I'm just going to play it forward a bit. So again, I'm just waiting for a close above that. And we don't get it. This is why. Let's see. Do we get it? So at this point, okay, it looks like we're going to. At this point, if we get a close below this low is where we would have a bearish change of state delivery. Alright, so we do get the close there. So now this would be, oh, I already have the deviation up. So now we have, let's go through and mark our zones. We have this zone. So this is not, this is Q1. This is a Q1 manipulation zone. So we're not going to take any trades from this. I guess London. It's technically midnight, so we'll just do London, Q1. Q1L. And then we have our Asia, Q3. Sorry. Q3 Asia. And our PM low is still holding at this point. And this is a Q3 manipulation because we closed through for it's an actual being manipulation during Q3. Q3 PM. Alright, so this one can still deliver. We won't know until we flip this here. Let's see if we get, or what happens in London Q3. So again, I'm looking for, okay, we don't, not coming, but this is the close I'm looking for us to get a bearish change of state delivery in London Q3. So far, continued bullish CSDs. This is the one I would refer to in Q2. Okay. Great, so we're continuing to displace. Again, we can't take a trade here because it's originating from... Oh wait, we're back in Q3 though. Okay, hold on. Let's bring up OTE here. So the SBS in this case... A lot of steps. SBS in this case would be 1, 2, 3. So 4 has to sweep 2. So I'm assuming this would be 5. So the entry would actually occur in here. That's hard because we did actually complete this SD. This looks like a trade Adrian would have taken. And again, we can take the trade in any quarter, but we have to be referring to a Q3 manipulation. Alright, so now let's grab our OTE and see if there's an entry here that fits our criteria. Oof, all of them. Except for 0.50, so it would just be these. So 2... I think we did take actually 6 January 6th. Yeah, we did take it. Let's see, here's our Q3. We did take the trade here. We actually took it here. Sorry, here. And we have a new SBS coming out of it. This is the AM session. Yes, this is the AM session Q3. And this is the PM session Q3. So we took the trade here. But we closed the trade early because 4 PM came. Oops, sorry. So we actually have this trade here. So 4 is the entry that we're looking to take. So now, if we were to take this trade though, 1.5 and 1.5 are the same exact level. A few points apart. Okay. Ooh, tough. That'd be hard. I admit that this would be hard to enter on. But this is definitely the SBS that is here. Oops, sorry, wrong one. Yeah, so we just don't want to close below, but if we pull this up right here, see how it bodies this? When you're taking a level or when it's running liquidity, it's very common for it to close the low. Like this low right here is actually what we would be watching. Of course, the 0.79 level is what we, where we're hoping to get the entry from. But this low right here, if it were to close that low, for example, like let's say the actual low is at 0.79. If it were to close that low, but immediately after it's unable to displace below that low, that's actually a telltale sign that's the reversal, right? Because it literally just ran that low to take liquidity essentially. But here, it doesn't even body it, it just wicks it and then closes it. So, indicating speed. But again, admittedly, this is a hard trade to take. I do want to see if Adrian actually took this trade. This is on January 7th. Let me just go into Discord on your screen really quick. You guys can't see. Those 2 black candles before the last expansion were manipulation zone. Would wait for it to come back to that. Yeah, this here, except we can't take this because this is a Q1. These right here. So I already marked it out, but we have Q, this is the Q1. These right here. To the right of Q3. These here. Yeah. We could, only if there's an SBS that forms here. So it could be 2 that forms, like if it comes back. I'm going to document this because this is an entry from the Q3 here. It's just hard to catch because I'm going through all the steps of everything else. But this can be an entry only if it forms in the form of SBS, because that is part of the model that we're trading. So for example, if it goes anywhere, literally to any high, because we've already broken structure through all of these points here. But if it goes here, forms a 2 anywhere, new high, and then returns back to the zone, yes, that is 100% another entry we can take, being that this is Q3. However, the requirements that we have for a Q3 manipulation is that the manipulation, we just wanted to sweep like either a session, or we wanted to sweep the quarters, or at the bare minimum we wanted to sweep TMSO. So I actually, I don't know if you recall this, but I went over this in the last session after I spoke to, oh, hold on. Q2 starts at 1:30. Okay, great. So we do have a TMSO sweep here. I spoke with, I don't have TMSO here, of course. I spoke with Adrian about what he's requiring for TMSO, or for the how we're defining the manipulation. Like, what do we need to actually manipulate? Because for me, for my standards, I would actually want the manipulation to be obvious in that it sweeps a whole quarter like this, right? Or a session liquidity, because that's my A+ model anyways, that it sweeps the session. And he said that he's really only requiring TMSO for it to be considered a manipulation. But the A+ setups come from sweeping a session. So like this right here, when we swept this session and then we manipulate, and then we finally close above that, this is an A+ manipulation. So here in this case, although this would count as a manipulation by the minimum standard in which it swept TMSO, I technically wouldn't count it because we didn't sweep session, right? So I want to remind everyone, as well as myself, that our goal here is actually not to take every trade possible with this model, because this is already an A+ model, right? Or this is the model that Adrian trades every day, and we've narrowed it down to the highest probability proponents, in being that we're only using the Q3 manipulations, and we're targeting the 4-hour candle expansions. So because we're using the 5-minute CSD that's happening within Q3 to target the next 4-hour candle expansion, we have already eliminated all the low probability factors that occur in Q1, Q2, or Q4. We've already applied the high probability situation. So with that, there's going to be less trades, right? So yeah, our goal with this is not necessarily to catch as many trades as possible. Our only goal was actually to at least capture just one A+ trade per day. And if we are able to capture one A+ trade per day with the model, then Adrian and I both agreed that that was satisfactory for what this could produce. All right, so no. Well, so okay. So sure, it would be hard for us to take this emotionally, but mechanically, this is the model. So although I'm saying out loud that this would be hard to take, this is mechanically the model, right? Because this is the SBS that's playing out here. So we have 1, 2. When I'm here though, I'm looking, there's just there's so much to go through in price action that I'm forgetting that we already have the PMQ3 session. I mentioned here though that we want to see if this low will hold, and if this low will hold, then this deviation could deliver before we even got into this area. And so when it dropped down and then continued to trade up, then I was just waiting for this CSD to confirm that we would indeed go higher. But because we're returning to this Q3 zone, this is the setup, because we were just waiting for 4 to sweep 2. So mechanically, without, applying my emotions to it, this would be the trade that we take. And that's what people have to understand with backtesting, is that we can't form fit just because. Sure. Feel free to. I'm gonna document this while you do that, or mark up everything else while you do that. All right, so we can't take any trade until this one, because we have to take 0.79, but it would have to be a sweep of 2. So we can only take 5 actually. So 0.5, yeah, we can't take 0.79. The only trade here that we can take is 0.705 up to 1.5, because this is the first time we have the sweep, so we can only take entry 5. And so then from here, 0.79, okay. Sorry, 0.70. Okay, yeah, the entries don't become valid until after this point. So you could slap it here technically, but you wouldn't want to take a limit order at 0.79 until after you have this sweep confirmed. So after this candle closes, the sweep is confirmed. I think even here it'd be hard for people to just slap it and let it continue higher. But after this, then you have order flow holding at this point. I see the 4 occurred not closing past the low. It starts to run up a little bit once that 4 swing low forms. Then I'd see if I could take 5, which I don't know if it's going to be higher or lower, in hopes that it doesn't close past the low and validate the whole thesis. Yeah, 100%, which is, again, it's hard to take, but if you're following the model mechanically, definitely that's how it would play out. And Adrian proves that every day, I think, because if you see the trades that he takes, he's marking out SBS, and again, not knowing whether 4 or 5 is going to be lower, he just takes it at the zone. So one thing I want to point out here, right, is this is so key. When you have price returning back to 50% of the zone, like not 50% of the expansion range, but 50% of the zone, and you have reactions like this, either where it wicks it, displaces up, or it misses it and displaces up, these are signatures for sure. And I think that that's so wild. Yeah. So he does it for extra confluence. So for example, here, so let's say 140 is here. He may not take this exact entry. He'll wait until this macro hits 150 to 210. So he'll take the entry. He'll wait the 10 minutes to take the entry instead of taking it here. He'll just wait a couple of candles like that. So because so now let's look at this. Let me go back here. Let me replay this to 3, or no, yeah, 2. Okay. So on the 1 hour chart, one. Okay, yeah, 2 hasn't opened yet. Okay, so on the 1 hour chart, we've closed lower here, or sorry, yeah, we closed lower on this candle here. And then on this 1 hour candle, when we closed down, we wicked lower. And with that wick, we would pull 50% of it, which happens to line up with 50% of Q3. And we have not been able to close below that going into 2 a.m. So at 145, 150 into the macro, we can see that we're above that CE. We're above 50% of the zone. We've already have the sweep of 2 creating 4. So Adrian would more than likely wait the 10 minutes, or yeah, the 10 minutes from this candle to re-enter, or to enter at the 0.705 level for the next 4 hour candle expansion from 2 to 6. Yeah, you actually, technically, we want the body close, and this is something that I would encourage you to backtest, Adrian. Shoot, your Maya. This is something that I tested back in like 2023, I think. But like, this is a good example right here. So you see how we have this low, we close, we body below it, and then we displace up immediately right after. This is the signature that you want for a market structure shift. So when you close the low and then you close the high prior to that low, this is the A plus market structure shift. And 1 second, stick to the plan 1 second. So, but yeah, I mean, again, you can back test this, right? But like, for example, this structure shift up here, right, where we just wick the high, and then, you know, it's struggling to close the low, but we do eventually close the low. This is not A plus. This is like B minus. But you can backtest it 100%, because what's happening, in my opinion, and my interpretation of price, is that when you're bodying these lows, right, when you're closing these lows, this is the actual order block that's A plus, because all of these orders that were resting here have been basically accumulated or paired up with in this order block right here. And then it's sending price right back in the opposite direction, trapping whatever sells were, you know, exchanged here, trapping those sellers in this area. So they have to wait for price to return here in order for those sells to be bought again, right? But when you have a wick that wicks below the lows, although it may be a while before it returns, it more than likely returns a lot of the time. Those are not, and again, you can backtest it, just test these types of things, like where you have the wick versus the body close. The body close delivers a lot more. No. I'm gonna drop a secret here. I actually learned that from Dave Teaches FX, and I didn't actually learn it directly from Dave Teaches FX. I have an ICT friend who studied under Dave Teaches FX, and this is one of the things that they backtested. He brought it to my attention. I backtested it, and it made a lot of sense to me with the order pairing, like with order block specifically, because this is. Let me see if I can find it for you guys. Hold on a second. Okay, so this is irrelevant to the model that we are trading. This is just a little bit background context for myself as a trader that I am showing you guys. But let me show you something. Let me show you a pattern that I used to trade in 2023. May of 2023, I learned this. Let me see if I can find it. I don't even know where it would be at this point. Hold on, hold on. I feel like I would have deleted it by now, but I'm positive I still have it. Random. Bear with me. Oh, look at this. That's hilarious. This is SBS before they named it SBS. You guys can stare at that. That was SBS before they named it, like, before Stoic came out and was like, this is the model. This is the only model you will ever need. Okay, hold on. Can't find it. When I find it, I think it's going to be absolutely hilarious, but it is a specific way that I learned order blocks, which like changed my whole perspective on how I seek order blocks and which order blocks I pay attention to, but can't find it. I know it's somewhere nearby. There we go. That is hilarious. I found it. Okay. Okay. Yes, I sure can. Here you go. This is SBS, guys. If you guys, hopefully you guys can see my mouse. But you have 1 where we break structure. Technically, it's down here, but 1, 2, 3. Or sorry, I'm lying. 1, 2, 3, 4, 5. The zone that they're referring to, right, is the order block that's created in this area before the break of structure. And and if you guys have heard me say before, I look for the order block inside of the order block, which I absolutely mentioned was in the last 3 sessions to you guys. I look for the order block within the order block, mostly because this order block will happen at the 50% level of this order block. So this is the first sponsorship of support in which is holding at the mean threshold of this order block. So 1, 2, 3, 4, 5, right? So quick scalp from 2, continuation from 4 and 5 into the high, which would then be 6. Okay, so now let's get to here. So this is how I learned order blocks. This is how I learned to find them, right? So true OB, candle that raised the liquidity pool of high importance. What's high importance? Session liquidity. I'm just going to feed it to you. Final raid on sell side or buy side liquidity during the manipulation stage. That's what the actual turtle soup is. So this is the OB being formed. When that OB gets swept, this is the actual soup. Okay? This is the actual turtle soup. And then when it breaks out of that area and returns, which is 1, 2, this is the low risk entry. Okay? Now, what we called this true OB back in the group that I was in, right? This is where I met Hitman. This is where I met JD. This is where I met Misk. This is where we all come from, okay? This order block right here that closes the liquidity This is the order block, which we call the true OB, aka the supercharged order block. I can't, it's so ridiculous. Well, the supercharged order block is is what would send us. No, that's not a breaker. But this is it. So honestly, this works though, because again, if you backtest the lows that get closed versus just a sweep, like let's say this one right here. Oh no, that does actually, no, it doesn't sweep. Okay. So thank you. Thank you. But if you backtest these right here, where you're actually closing the liquidity, and this is actually the signature. This is my whole model, guys. Okay, like let's just imagine there's session liquidity here. But my whole model is when we have, let's say this is Asia low, for example. Asia low. And even better if this is London low. And like this is New York delivery, right? London low comes sweep Asia low. Then in New York, we sweep London and Asia low. And then there is a fair value gap going into that level, right? Then there's a fair value gap coming out of that level. At that point, when we close the high before that low, that I'm slapping every single thing to get into this trade. That is my A plus setup. So a swing low, for a very crude depiction, swing low. We have fair value going down below that low, fair value going back above that low. I'm in anything that's happening here onward. Vice versa, we have a swing high, right? We have fair value going above that swing high, fair value going down below that swing high. I'm in anything going lower. That is the A plus model. Can I share the other image too? Sure, absolutely. Guys, I'm no gatekeeping around here. Believe that. I'm a part of Kingline, by the way, so you know. This is our motto. No gatekeeping. Just you know, remove I don't know, remove the logo. But you're saying that sweep of Asia and London lows should have been a candle that bodied those lows. Yes, exactly. Like when it's, I love to see the body above any session liquidity and then a snap right back into the range, which it was a body here, right? So like, for example, here we close these lows. If I was using this as the example. So like for this, for example, when we close this, or when we wick above this high here, and then we shift, this is kind of the detail to me that says we're gonna come back for these highs at some point. Like this is like this may not hold, or when we deliver this, it's not going to be as strong of a delivery as this. So like notice here how this is lethargic, this is taking forever, versus this move here is just speed up. So same thing here, we body below these lows, we body back up, and then this speed or this delivery is very fast. That to me is the signature that I'm looking for, which is why like I can leave every day at 11 a.m. or why I think I can leave every day at 11 a.m. Because to me, I think that we're headed back into this area when we have this type of signature. And again, you know, obviously you can come up with a way to backtest it. I don't know, just make up any rules, but you're basically just testing a wick above liquidity versus a body below, a body above liquidity. Come up with some type of rule set around that. Like, I don't know, 1R even, right? And if you do just a 1R for these trades, you'll see that like the body is much more reliable than the wick. I'll take that one to the bank. Yes, and the zucchinis are 100% more worth it. Okay, so let's hold on, guys. We got way off track here. Let's actually track the rep that's in front of us. Okay, so we're using PM session. We are in London. We can take the trade now. And we are taking a 5 entry only. Okay, so this is rep 13. NQ. And see, you know, again, another side note here. Notice that I can pull up all these screenshots or all these, like, you know, photos and images simply because I journal. Oh yes, do we monitor the 4-hour open levels and the displacements that come from them as secondary entries? So not necessarily as secondary entries, but we are technically monitoring them as a result of open, high, low, close, right? So because we know we're going into the next 4-hour candle expansion. Thanks for reminding me, Yerm. Because like we're going into the next 4-hour candle expansion and there's an entry occurring at the macro before that inside of a previous 5 minutes change of state delivery Q3, then we know that this is high probability to capture the next 4-hour candle expansion, right? But we are not using them like as a level to enter at specifically. Yes, exactly. Not as... Okay, great. Also, but you'll also find that, like, naturally, because it's an algorithm, naturally we'll find that most of the entries will occur near at that open. Of course, like, I'm sure you know already. Alright, so let me actually do some work here. January 7th. This is Tuesday. We're going along the entry. We'll go with Adrian's entry just because I know he would have waited 10 minutes for that entry. So we'll go with 150. Kind of on the fence on that. 150. We don't have an exit just yet. This would be for the 2 to 6 a.m. candle, and this entry we entered during Q2. The PD array would be this OB. Sorry, keep pressing the wrong buttons. OB, and this would be from the 0.705 level because we can only enter after the sweep of 2 is confirmed. So the return 2.705 within the macro is what we're looking for. Okay, it's not showing up. And this is SBS 5, and 5 was a failure of 4, and this was during 150 to 210, and I don't even have 150 on here. Oops. 210. And let's make this blue, green, purple. Wait, what happened there? There we go. Yes, swing break sequence. If you guys ever have questions or you want to see what we've done in previous sessions, you can just scroll up. I have screenshots of all of this. You can find the swing break sequence in Freedom's channel for sure, but more than likely you can also just find it within this chat because I'm the only one that uses this stream stage. But you'll find the screenshot of SBS somewhere within either Freedom's mentorship or within this this chat. I'll just pull it up for you really quick just because I'm up. Isn't it eerie how similar Yeah, that's hilarious. Man, I've been... It's actually pretty crazy to realize how long I've been in the game now. Alright, so... We'll just play through. We were up to here. We're looking to get to 1.5. This would be the full delivery. And if a... Okay. This is what we wanted to see. Hold on. Now, he doesn't break even until 1.5 SD. Was there anything... I don't know if that there's any reps that I need to change according to that. Thank God Cryptic was here to put me in my place last time and correct me there. But here, now we have a 1, 2, 3, right? So we have the sweep of 2 now here. This is the zone that Stick to the Plan mentioned. So we did just miss it right here. So if it gets another sweep right here, or another tap right here into this zone, this could be an entry. However, I'm not considering this a Q3 manipulation per the model standard specifically. But I do agree this is a manipulation in Q3. Like if we're isolating manipulations per quarter, this is the clear manipulation of Q3 for sure. All right. So this is the CSD. This is the potential CSD that could cause problems for us. So although we have it here, we want to see if it will hold and continue to deliver, or if it's going to continue. We cannot break even at this point because again we can't break even until SD 1.5 anyway. So we are going to continue to hold this trade because we are already in it. All right, so we did get the tap of the zone. Stick to the plan. Look at that. So your plan would have worked out perfectly anyway, even though this is not a part of this model. But this is, I mean, that's a clear SBS right there happening for you guys to see as well. And that's typically how it forms. So you have a manipulation zone. We displace out of that manipulation zone. We have a retracement and then we expand higher. 1, 2, 3. Then we're just waiting for a sweep of the zone to occur once we sweep 2. And then we can get that double tap in 4. Because we are... This manipulation right here is Q1. Right, this manipulation is not considered manipulation for us because it neither swept a quarter or a session. It did sweep TMSO at the bare minimum. So, and again, that is what Adrian considers. Hold on, where's 130? 130 is here. This is TMSO. So at a bare minimum, this is what he required. But the A+ setup is when it sweeps session or quarter. Yes, exactly. Exactly. You're with me. I'm going to delete this SBS. Hopefully you guys all saw that in real time and you understood the assignment there. I'm going to also delete that one. Ooh. Here's that CSD. Yeah, we can sweep quarter lows. So again, we do want this. Like, this is the signature that we're looking for here, where we sweep session and then displace through it. But here, for example, where we have, because this is an obvious CSD, right? But we only swept the previous quarter here. But again, like, you know, notice that this is the session sweep. Let's say we're using this as a manipulation zone. We swept the quarter to return into that manipulation zone. So the SBS can be 1, 2, 3, 4. Okay, never mind. It already taps that low anyway. But you know, same theory here. Let's say we go up to the 15 minute in this example, because I'm sure that it applies there. Yes, so it doesn't even apply here actually. But 1, 2, 3, 4 comes back and sweeps the high. See, so that's what I was talking about. Is like you basically always have an intermediate term high forming that's gonna get swept. You know, again, just applying more ICT lingo. Alright, so the CSD is still being invalidated. It's just accumulating on top now. We are accumulating as opposed to displacing lower. We still kind of don't have an answer. We're accumulating inside of the London range. I don't think that we did already close this 4-hour candle. So the 4-hour closed here at 2 a.m. or at 6 a.m. Sorry, closed here. We were in profit. We're going into the next 4-hour candle now. There's still no, this is something that I also have to talk to Adrian about. There is still no decision on how long we're holding. Now we can confirm, do we want to keep holding? So that's the 7, 6. Okay, so the 6 o'clock candle did not close lower. So that to me tells me that we can continue holding. On the 4, the 2 a.m. candle closed bullish at the end of that. So that would confirm that we can also continue to keep holding. Although it is looking like a brutal hold. But because the 1 hour closed inside, and I'll show you why that is. Let's go back to 5 actually. 5. Guys, hold on. We're gonna take a break here really quick. I'm sorry, my phone is blowing up. I just want to make sure no one's dying. Quick 5-minute break. Okay, sorry about that. We're good to go. Alright, continuing up. There's a sweep of London. Asia's right above us. Okay, so 1.5 deviations is about 30 points, 40 points away. Let's see if it can make it to target or if it starts to lag here. Oof. Brutal. 9:30 open right here. Alright, so again, there is no, we don't have an outstanding answer on when we should close. I do think it's reasonable to close by the end of the 4-hour candle, but until we have that as a definitive answer, we're gonna just continue to hold this until target or stop loss, which is not looking good. Darn. Tough. Okay, so we're gonna record this as a stop here. We did not achieve 1.5 deviations, which is our overall goal. So we did not achieve it of... Oh, wait, we might have. There's the London sweep here. Or not the sweep, but this is the beginning of the session. So this would be the SD. Oops. Alright, so we achieved it on that one, on this current one here. Alright, I'm gonna have to get Adrian's thought on this. Back out. Oof, and we missed OTE. Okay, yeah, let me take a screenshot of this to send to Adrian. Alright, and let's track the rest of the trade here. I'll also grab it for Wait, it doesn't start until there. Oh, it's okay. I'll grab the link for the rep. On the 15th. Right here. So we were trying to get down like we were trying to get down to this level before the high, into the OTE level anyway. Or sorry, before the long. But we obviously this played out. So we took that. Now again, what was tricky here is this sweep right here, right? So this is the thing, and again, I have to talk to Adrian about this because I asked him about it. He did confirm that we're using the most recent deviation, but this would be the that's 1 minute. This would be the deviation that I'm still working off of, being that this is the one that we're displacing out of, right? Like for the zone, or even this one. And he said it would be the most recent deviation. So 1.5 and 1.5 are still landing in the same area here. So that would still, for me, be the target. Now, I want to get his thoughts on this here because this is the most recent deviation in London. However, what we're trading from, or the zones that we're expanding out of in those deviations, this would be the target, in my opinion. Now, when we have this sweep of both Asia and London in one go, going into 930, I think this is very, very risky to hold through anyway. And again, there's always that question of, are we holding until the 4-hour candle close? Because that would make the most logical sense to me. Being that we didn't reach our standard deviation target, do we close by time instead? Which, you know, again, you guys have seen me do live. So I need to discuss that with Adrian to like make sure. I'm just deleting all the unnecessary things. I want to get his clarity on that, or get his opinion on like how he sees that, because if we're only using this 5-minute deviation to catch the 4-hour candle expansion, but the 4-hour did not expand to where we thought as far as deviations go, then we should close technically by the close of that 4-hour, because that is the expansion. That's the whole purpose of it. The 4-hour close is here. So we're well over 2R at this point, I'm sure. And the most recent deviation is this one at this point, aside from like this little sweep here that's happening within the macro. So let's look at this on the 1 minute at the entry. So on the 1 minute, this would be the expansion. This would be the manipulation going into London. And we met that clearly. So once we tagged 5, it starts to consolidate, and then we're entering 930 territory, which we never, I mean, I've never held through the open. I don't know. Yeah, exactly. 100%. And I agree with you there. I thought too, before Cryptic corrected me, that we were going break even by 1.5, because I obviously, at least by 2R, I would have broken even by then. But I'm told that nope, it's 1.5 SD. Directly from Adrian, which I had, like, I did not know. I misinterpreted that before we started backtesting this. Yes. Let me show you. Let me show you guys for clarity, because I thought the same thing 100%. So when London hits 1.5, since we are trading London and referring to Asia, oh, he might have answered it. You use the new one for the trade, so when London's manipulation hits 1.5. But is this a new manipulation? Ooh. Guys, I might have my answer here. He said when I asked about trailing stop, hold on, let me not lose track. Let me go back to what I was talking about with Urim really quick. In regards to the trailing stop loss issue, Yes, 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 yes. Rectangle. There we go. Swing point to swing point or deviation and change of state delivery. Again, this is what I went over. We've already had another instance of this. Deviations from change in state deliveries only, right? So this is why the swing low to swing high or swing point to swing point is questionable to me with the inside candles. Do you have a trailing stop method? SD 1.5. SD, which is wild to me. Bananas. And then again, you know, for additional context of what we're trying to achieve, using macros to align the model with the H4 or H1 open low high close or open high low close. Okay, so now let me show you guys the next screenshot, which I just realized maybe will give us our answer for how we're tracking this trade as a loss or not. Jump to present. Because I asked him about this in since our last session. I'm gonna need the whole screen for this one. Okay. Oh wait, you can't even see it. There we go. Since we are trading London and referring to Asia, but there's also a more recent manipulation in London, which 1.S5, which 1.5 SD should be referred to the trail RSL? You use the new one for the trade, so when London's manipulation hits 1.5 SD. Now, let me pull up those charts really quick. We had a new manipulation, but it didn't take session low. It did sweep Q3 though. London. Okay. Yeah, I think we would have trailed our stop here. We're taking this trade into London. So it would be this manipulation here. We would trail here. I think we would be in profit. I have to be super realistic about this. Yeah, I mean, again, I think all of us in general would have trailed our stop by now. We're up 100 points. But I think this is the deviation we would follow. It wouldn't be this one. Now, though, our TP would only be 3, I think, at this point. It wouldn't be 1.5 of the previous. I just showed you why. Because Adrian said that we would... Adrian said that we would use the most recent manipulation. So this is the manipulation going into London. And ever since this manipulation, we had not had a new manipulation. This is the one that returned to the zone. We get a new manipulation coming out of that. So it'd be this manipulation here. I don't have the screenshot anymore. I closed it. Hold on. No, the manipulation he pointed out was this one in Q3. So again, we can take the trade in any quarter, right? But we're only using the framework from a Q3 manipulation. So in this point, it's still the PM session that we're taking the trade out of. But he's saying that when we place our trade, for the or like when we place our trade and we're using it to, I guess, target and trail stops. Again, I have to verify the targeting part. But for the trailing stop specifically, he said we're using the current manipulation. So although we're using the framework of Asia session, for example, or we're using the framework of PM session, or we're using the zone of PM session, we're using our current London session manipulation to trail our stops. So once we hit 1.5 here, we'd go BE, no problem. So we wouldn't be in profit, we would just be in BE. Sorry. So this is just a break-even trade. Wouldn't that then be a new trade off that manipulation? Yes, if we return to it. Well, no, not for us because it's happening during Q2. We're only using Q3 manipulations for the trade. So this is Q1. Q2 manipulation would be here. Again, if we're isolating the manipulations per quarter. I do record these sessions. Would the targets also not be off that manipulation? I think the targets technically should still be off the zone that we're trading from. Because again, although we can take the trade from any quarter, we're using this as the framework. We're using the original Q3 zone as the framework. And the logical target for this trade would be 3. Because 6 has to take 3. That's the only requirement for SBS. So we still enter at 5. And we're just looking to target 6. And we would achieve target by this point. But this doesn't meet the criteria of the standard deviation 1.5. We can aim for 1.5 because it is a sweep of 3. But technically for SBS, the only target is 3. It doesn't need, there's no standard deviation requirement for that. We're just using SDs, as the targets because we know that price will accumulate at these half levels. And you know, again, in this 1 to 1.5 level, if we're off trend or if we're counter trend, this is exactly where price will turn around, which is here. So we did achieve 3 here is what I'm saying. This is another, hold on, I have to take a screenshot of this. So I'm not gonna say that we hit target here again because the criteria that we have right now is that we are targeting SDs, although for SBS we did hit the target. Okay, this is why I'm saying that we hit the target, because we did take 3. But I will say that we broke even here. Does that sound fair to everyone? Because again, we didn't hit our full target. I just want to make sure I'm not form fitting here. We didn't hit our target of 1.5 since this is the framework that we're trading. 1.5 would be where we're trading to. But the current SD is what we're using to trail our stops. I'm going to go back into our messages really quick while you guys decide to talk to me or not talk to me. And I'm going to see if he says anything about targeting in our most recent messages. Okay, no. Yeah, he's only talking about trailing the stop here. He's not talking about targets at all. Okay. Okay, you guys didn't say anything. I'm gonna mark this as a break-even trade, which means to me too that I need to add a break-even category because I did not do that. EE. Yeah, the current SD then just goes back to the most recent manipulation and it's only relevant for trailing stop. Yes, that's how I'm understanding it, just based on our messages. Again, we can clarify all of this. Thursday will be the next session that I will be in session with Adrian. You know, I don't think my brother's gonna have another baby, so I think Thursday I can be here to like go over questions with him. And what we'll do is we'll go through all of these reps together, especially these questionable ones. This is hilarious. We spent this entire session on one rep. But yes, exactly. I'm going to say that that's how I'm interpreting targets off of Q3, because that's essentially those are the SDs we're trying to realize, or that's where we want to see the 4-hour candle expand to. And then the most recent SD for trailing stops. That's how I'm understanding it so far. If he negates that, the only thing that he would say is that if we're going to use our most recent SD for targets as well, then that actually changes a lot, because that means we're actually hitting TP a lot. That would also, though, change our stop loss significantly, because then our stop loss would just be here. It would be this tiny, like, 7-point stop. It wouldn't be this, so all the way to this low. Which I think would also make testing Q3 significantly harder, because if we're using the entire Q3 zone, and we're not using the entire Q3 zone as a stop loss, I think that changes the dynamics of the study a lot. Can we clarify with Adrian? I think we should use, right, so if you guys can show up on Thursday and you guys can ask him questions on Thursday if you guys decide to be there. But whenever I see Adrian, yes, I will clarify with him. But in our discussion so far, let's just go back to this right here. So see, we're using this manipulation as the framework, this is kind of what has happened in our current session, where we have the PM session. Manipulation is the framework that we're targeting, right? We make it all the way down to 4 to 4.5, but he's using this SD to trail his stop. And he mentioned in our chat together that the reason the trailing stop is tricky is because 4 always comes back and stops 2 out, right? Because we're waiting for the entry of 4, SBS 4, for when the sweep of 2 happens. And we said, okay, no harm, no foul. Then we just get stopped out BE, and then we re-enter 4 or 5. That's great. But the targeting will always be off of, from the actual manipulation zone that we're using. So here we get the entry in Q3 as well. Notice that he doesn't draw a new zone for this, because we're entering off of the previous PM session zone. Once we meet these deviations of the actual framework, then we have this new SD here to go back into the zone once more, or to target, previous day high essentially. And this has the SBS as well to play out, to go in that direction, where he has OTE and whatnot. So this is what our worry was when we were going into this test, was because framework itself is so discretionary, is how do we make this mechanical so that we can backtest it. Yeah, exactly. These are the longer holds. Yeah. That's why 4 and 5 are the more secure, which again, I would refer you guys to this screenshot right here. Keep this logic in mind, is that when you're entering on 2, you should be closing immediately. But if it's a 4 or 5 entry, you can pretty much target 3, no problem. But for the 2 entry, you should be closing at the nearest swing high essentially, or whatever makes sense for this deviation. For example, like if you pull this deviation here, this will more than likely at least deliver 2R. This is where you want to close immediately. This is where you can start to hold longer, or this can be your add-on. Yeah, the rules are here. You can also find it in Adrian's mentorship channel. Yeah, you're Maya. I agree with you. I 100% agree with you. But using the most recent SD for trailing stops, exactly, and taking BE, that's 100%. I agree that that's positive expectancy. I'm 100% with you. What I don't, or what I'm still on the fence about, I'm actually firm on it, but what I'm trying to explain is that I think the target is for the framework of entering on Q3. Second, you can screenshot the screen. Q3 5-minute manipulation zone. I draw out projection fib on it and trailed it that way. Highest probability deviation is 2. That price will reach it. Exactly. 100. So yes, I thought the same thing. Until I reread the messages with Adrian in which he says to use the most recent ones. And again, you know, we'll all be able to prove it right or wrong within this backtest. God willing. Can you add the trailing stop rule as well? It's already there. Trail stops at 1.5 SD. Trade idea invalidated if 1.5 SD is achieved without returning to the manipulation zone. No problem, no problem. All right, so again, let's just finish tracking this long ass rep. Okay, so we're gonna track this as BE. Hopefully everyone is in agreement with that, and if you're not, tough luck. I'm running the session, so BE will have occurred at 10 a.m. So we held through 8 hours now. I definitely am going to implement the rule. I think that we close by the 4-hour candle. I just want to run that by Adrian first. So I'm going to write that down as something else to address with him. 4-hour candle close. Now again, before we went into the next 4-hour candle, notice that the context that I used to continue holding was that the 4-hour and the 1 hour were in agreement at that time that we can continue holding. So for example, here, when the 2 a.m. candle closed, it closed bullish. There's no reason to not keep holding. When the 5 a.m. candle closed here, it closed bullish. There was no reason to not continue holding. Now, when 8 a.m. closes, which is at 9, that's still bullish. Where the decision should have been made to close was when we swept 3 and we were unable to displace past 3. So this area right here, we swept 3, no close, no close, displaces lower, no close, sweeps the high one more time, and then dies going into 930. So this criteria, or this price action happening prior to 930, we should have all known better to not hold past that. I highly doubt that we would hold through the open with the model anyway, but you know, we're learning together as a group. So 10 a.m. was when we closed that. This was a long ass trade. That's 8 hours and 10 minutes. 8 times 60, 400, and that's not right. That's 8 times 60, guys. 42, 420, 430. Right? 8 times 6, 42. Is that right? 48. Good grief. 490. Sorry. Alright. 490 minutes. That would have been a long ass hold. We're BE. Wouldn't it be wise when New York AM created the manipulation in the opposing direction at market open? Are you talking about here? Sure, but we've already lost half the trade by then. Right? So like in this, the candle isn't closing until 9:35. 9:35 we've already lost half the trade. So we have the opposing liquidity run, but we don't know where the next 5-minute candle is going to close until it actually closes. And we're not dropping down to a 1 minute to determine if we should hold this trade. Yes, it does. Because here, when we close above higher here, I would think we're going back for that high until, you know, proven otherwise, which would be here when order flow is holding. But again, SBS wise, we would have closed here, but the SD that we're closing for is up here. This is all good examples for us to get answers from Adrian from, or what he thinks the take should be. I think in general, okay, so me as a trader, we swept 2 session liquidities plus the daily open. I'd be closing. This is over 2R anyway. I'd be closing 100%. But according to targeting the SDs from the manipulation zone, I would have at least trailed break even by now, being that we're in the 1 to 1.5 area in which where we could be counter trend, which is why this would be a break even trade to me. So at a minimum, as me as a trader, without following this model step by step, I would have broken even anyway because we're in this area. According to Adrian, he would have broken even as soon as we got here anyway. So it's all the same shit, right? This is a break-even trade no matter what. But according to targeting the deviations from the manipulation zone, we're targeting up here at a minimum. I do not have the SMAs on. We decided to not add too many components, but I wouldn't be surprised. This sweep the SMAs right here. Is that what you're looking at? I don't have it on. We decided together, Adrian and I, to not use that already because we just have so much going on as far as being able, because we're trying to make the narrative mechanical for all of you guys to follow, right? Which is, it's hard. Narrative to be mechanical is hard, in my opinion. The only mechanical narrative that I have, oh, I see. The only mechanical narrative that I have is daily closures for bias, and then, you know, candle closures for continuation, which I just showed you guys. Okay, I'm just gonna, we are just struggling. Yeah, they do, 100%. I'm going to draw on the trailing stop really quick before I go any further. We get to right here. That's wrong. This candle. Oh my gosh, I really did that. Okay. 1.5 tag bear. All right. I'll delete this guy. We don't need that part of the context. Q. Q1 London. That's fine. Delete this. Okay. I think we're good now. We have PM session Q3. Yes. I can zoom in. Alright, so this, again, I tracked as break even. I think everything else is solid. So this is a 0R. And we got delivery, or we did not get delivery, actually. Okay. Yeah, I'm gonna go by the framework for the SD that was achieved from the zone. So considering that, hold on, let me get one screenshot of the entire day. And then one zoomed in. Oops. Okay, now the note that I want to make for this is that we should have closed at the 4-hour candle close ahead of the market open. Or ahead of market open. As well as that's it actually. Oh, there we go. Price reverses after 3. After 6 sweeps 3 plus 2 session liquidity and daily open. Alright, so this should provide me enough context that I know how to explain this to Adrian when we're asking him questions. I think we're good there. Alright, we've spent 2 hours on 1 rep, guys. I am going to call the session here. Do you guys have any complaints, concerns, questions, anything that you guys want to discuss before we disperse here? Also, if you guys have any requests as far as screenshots go, let me know. Everyone should have the link for this. If you don't have the link, I will share it now. Or maybe I won't. Whoa, they changed this. Hold on a second. Unpublish. Oh, there it is. Here's the link so you guys can review it yourself. I don't have you guys, I'm not giving you guys the ability to edit the sheet or to duplicate it just yet. Just because we haven't fully mastered this and critiqued this to the best it could be. Yeah, I agree. I think that all the inquisitions that we're making for every single rep, I think it's amazing. And I think it's going to help everyone's understanding of the model, including myself. So I like the participation, and I don't mind spending 2 hours per rep. I think the model right now is technically going good. We just need a little bit more clarity on the targeting right now, because we did get clarity on the trailing stop. So we just need to figure out the targeting. Other than that, maybe we can define more like what we're considering the Q3 manipulation. And I will, I can show you guys a screenshot, but just take my word for it. He said that the A+ setup is when we get a session sweep. Will there be a recap of the algo we're going by in the end at some point? I feel like I'm getting a little bit lost in the weeds. Yeah, of course. So like the rules at the end, whatever is up here, that's going to be the final rule set, because this is always going to be ever changing as we develop with the model. But 100%, this will always follow. Like I edited this immediately when I found out that it's 1.5 SD instead of RR. Yes, this backtest session is every Saturday. It is on Tuesdays and Thursdays as well, except those are a little bit shaky right now, just because I've had a lot of personal things going on. But I intend to be here on Tuesdays and Thursdays at 7 p.m. every Tuesday and Thursday. So, long story short, I don't know if you guys remember all the OG members, but I had a tree in my backyard that fell last year. That tree fell again, or the other half of the damn tree was at threat of falling on my neighbor's house. So I had to get that tree cut on Tuesday, the day after my brother's wife decided to go into labor. So this specific week has been insane. But every Tuesday and Thursday at 7 p.m. we do this backtest session. Thursdays is technically just a recap with Adrian, but they will be some sort of Q&A for this model and backtest as well moving forward. But this Saturday, every single Saturday, I have been solid with this 12 p.m. session. So yes, this happens every Saturday, no doubt. Yeah, it's been a week. It's been a week. And I'm honestly glad I did not trade this week. with all of this stuff going on. So it's just crazy, crazy, crazy. But yeah, all right, guys. I'm gonna hop off here. If you think I'm doing it wrong, feel free to send me a DM. Oh yeah, sure. Do you think we're going to fill that unfilled end dog from earlier this week on Monday? No, I think we're going straight up now. So, let's go. I'll exit this really quick. Yeah, I think we're going straight up now. Let's go to blank. My pleasure, Vinay. Thank you so much for saying that. So, again, if you guys had not attended our sessions with Adrian and I, when we were calling all this out, we called out this price action a long time ago. So this here is the zone, right? Using that picture that I showed you guys earlier. This is the zone that we were intending to return to. So what we had marked out was 1, 2, 3. We were waiting for this sweep of 2 to finish, and it finally did finish. And we're back above order flow, so I think straight up into all-time highs. From here on out, I think this could be low of the year, to be honest. But we called this out many moons ago, and now it's finally coming into fruition. So what had been happening on this daily chart, which I did mention in the last session with Adrian as well, is that I normally watch this mean threshold to see if there's going to be support from this area, right? So I mainly use the bodies. We can use the full range as well. So this is the mean threshold. Once we close above it, we wick it, we body the lows, and we close right back up. Now that we're finally out of this area of consolidation, I think opportunity starts when we get above this area here. So once we close this, it can be like rocket in no time, is what I'm thinking. Yeah, I think we're done. I don't think we go back to fill it personally. This order flow should hold at a minimum, but if we get a closure above here before we retrace to this order flow, I think we go straight up. Personally. Thanks, Marco. Appreciate it. There's a chance to go lower. Is that what you're saying? Yeah, there's a chance. I could always be wrong. I'm 80% that we go straight up from here. That's how I feel. But like, let's go even to the weekly, right? So the weekly, I could still be wrong up until this point, 100%. So there's still like, there's at least 1,000 points between me being wrong or me being right. But I think we're straight up from here. Yeah, I'm bullish. I'm bullish. I'm at least bullish until we get here. And if we reject here and we start going lower, then I could definitely see a retracement in sight. But I do think even if we get up to here and we retrace, we're still bullish. So like let me put it like this. I'm bullish to this line. From this line, if we start hesitating, then we can have a retracement back to this OB, right? And then if that happens, then I'm still bullish. Then I'm 100% still bullish. But if we get a close here, then I see a retracement to this line and then bullish. Was that recent swing low 5 on the daily? Yes, you're with us. It was actually the weekly though. So we were mapping this out all on the weekly chart. So what we were looking at, yes. It's almost like you're paying attention, Yerm. Oh my goodness. So on here, what we had mapped out, I think it was this. I even think it might have been a monthly, to be honest. Okay, yeah, I'm gonna do it here. No, it was the weekly. All right, so we had 1, 2, well, this has to be 3. Sweep of 4 here, 5. And then now we're seeking 3. It is a miracle. Well, it's a miracle that you're processing it. It's not a miracle that you're paying attention. You do pay attention. But that it's clicking and translating, that's different. Because, I appreciate it though, actually, because it makes us have to work harder to prove our theory is actually valid. But yeah, we think that, or I think that. I haven't watched Adrian's last video, but if he says otherwise, you guys should probably watch that as well. But this is so clean, dude. So let me just show you the higher time frame that we were working off of. Maybe even 12. Was it the 12? Okay, so this mean threshold is what I said I wanted to hold. Then we drop into the quarterly, or sorry, 6 months. This 6 month BPR, right? From the yearly order block mean threshold, from the 3 month, I don't know what to call that thing, inside order block, right? This guy is what I was saying that we would come to. It's on video. I swear we called all of this like a long time ago. But it's all mapping out the way we intended. And we called out this SBS first. This was the very first thing. I think in that same session was when I said I wanted to come to that whole thing. So yeah, this is actually playing out exactly like beautifully the way we thought it would. So we just need to wait for these areas of consolidation to be done. Like last week, pure shit. This week, not bad. But now that we are starting to expand our way out of this area, I would 100% be expecting expansion now into these areas of low resistance. I'm gonna change your name to that. Yeah. Alright guys, I'm really out now. Okay, any final questions? Don't ask me another question, Yerm. Not you. You're excluded. Okay, great. Any other questions from anyone else? One more go. Alright guys, have a good Saturday. Touch grass, cut trees, do whatever. Cheers, have a good one. Bye bye.